At first glance, the global financial system seems like a complex network of banks, governments, and stock markets operating under transparent rules. But beneath this surface lies a far more concentrated and hidden power structure. A small group of individuals and institutions, often referred to as the shadow architects of finance, wields disproportionate influence over money, credit, and policy. These are not the politicians we see on television, nor the CEOs of individual companies. They are the central bankers, hedge fund magnates, elite financiers, and private consortiums who quietly shape the global economy. Through carefully coordinated moves, these shadow architects determine interest rates, control access to capital, and even influence which nations thrive and which struggle. Their decisions ripple across continents, affecting millions of lives without any public oversight. While ordinary citizens focus on job security, mortgages, or stock prices, these invisible players set the parameters within which entire economies operate. What makes this system even more powerful is its secrecy. Meetings between central bankers, international financiers, and influential policy advisors often occur behind closed doors, far from the public eye. Decisions made in these rooms can dictate global trade policies, the creation or destruction of currencies, and the flow of trillions of dollars across borders. The effects of this hidden control are subtle but profound. A sudden economic boom or crash rarely happens by accident. It is often the outcome of deliberate, strategic moves designed to consolidate power and maintain control over the financial ecosystem. Understanding who these shadow architects are, how they operate, and the mechanisms they use is the first step towards seeing the reality behind the world's money system. For most people, this is a truth deliberately kept out of mainstream narratives, yet it shapes every transaction, investment, and financial decision globally. Central banks are often portrayed as neutral institutions, quietly managing interest rates, inflation, and the stability of national currencies. But beneath this calm exterior lies a system of extraordinary power, one that affects the lives of billions, often without their knowledge. Central banks are not merely regulators. They are instruments through which the shadow architects of finance manipulate entire economies. Through tools like interest rate adjustments, quantitative easing, and open market operations, central banks can control the cost of borrowing, the flow of money, and even the value of a nation's currency. These actions might seem technical or abstract, but their consequences are deeply tangible. They determine whether economies expand or contract, whether markets boom or crash, and whether ordinary people can afford homes, goods, and services. Central banks are also key players in global coordination. The Federal Reserve in the United States, the European Central Bank, and the Bank of Japan frequently communicate behind closed doors, synchronizing policies that affect the world economy. While public statements might suggest independence and transparency, real decisions often occur in secret meetings with private financial institutions. These gatherings allow a few individuals to steer the course of nations, often prioritizing the interests of the elite over the public. Perhaps the most subtle form of control is inflation. By deliberately adjusting money supply, central banks can erode purchasing power over time, quietly transferring wealth from ordinary citizens to those positioned to benefit from financial markets. This invisible hand shapes everything from retirement savings to everyday prices, creating a system where people are bound to the choices of unseen authorities. Understanding central banks is crucial to seeing the broader picture of global finance. They are not neutral entities. They are powerful levers in the hands of a hidden network that quietly decides the economic fate of the world, far from the scrutiny of voters or the media. While central banks hold immense influence, private banks are the engines through which real financial power flows. Major institutions like J.P. Morgan Chase, Goldman Sachs, and Citibank don't just store money, they create it. Through mechanisms like fractional reserve lending, private banks can generate vast amounts of credit, effectively controlling the supply of money in the economy. Every loan, every derivative, every financial instrument they craft isn't just a business transaction. It is a tool of influence over governments, markets, and individuals. These banks are intricately connected to the shadow network of financiers and central bankers. They advise governments, manage sovereign debt, and often dictate the terms under which nations can borrow. For countries in financial distress, these banks become indispensable. But this dependency comes at a price: policy influence and economic leverage that extend far beyond typical market operations. The result is a system where private banks can quietly shape legislation, manipulate markets, and decide which industries or nations thrive. Moreover, these banks operate globally, often using complex structures to move capital across borders, evade taxes, and obscure ownership. This global web ensures that the decisions of a few powerful bankers ripple through the world, creating advantages for some and crises for others, all while appearing neutral or technical to the public. The combination of private banking power and central bank coordination forms the backbone of the shadow financial system. While the public sees banks as service providers, the truth is far more intricate. They are levers of control, shaping economies, controlling credit flows, and reinforcing the dominance of an elite few. Understanding their role is essential to grasping the real structure of global finance, a system that few see, but everyone participates in, willingly or not. Beyond central banks and private financial institutions lies the most elusive layer of control: shadow networks. These networks are composed of powerful families, private investment groups, think tanks, and off-the-record committees, all quietly influencing the global financial system. They operate without accountability, often coordinating policies and decisions that shape nations without any public scrutiny. While governments and media present a facade of democracy and transparency, these hidden actors pull the strings behind the scenes. Through lobbying, secret meetings, and financial alliances, shadow networks ensure that economic decisions consistently favor a select elite. They determine who receives bailouts, which industries flourish, and how crises are managed. Often, what appears as market randomness, recessions, booms, and crashes, is actually orchestrated by these hidden forces to consolidate wealth and power. Their influence spans borders, linking countries and continents into a tightly controlled economic web. One of the most powerful tools of these networks is the manipulation of debt. By controlling how much money is available, who gets it, and under what terms, they maintain a perpetual system of dependency. Nations, corporations, and even individuals are caught in this cycle, unknowingly tethered to the decisions of those in the shadows. Wealth and resources are concentrated in the hands of a few, while the majority remains constrained within a system designed to serve hidden interests. Understanding these networks is critical to seeing the real structure of power in the modern world. They operate outside the public eye, yet they shape the fate of millions. From financial crises to monetary policies, from bailouts to interest rates, the influence of shadow networks permeates every layer of the economy. By acknowledging their existence, we begin to understand how true power is exercised, not through governments or elections, but through secrecy, influence, and control over money itself. The culmination of all these forces, central banks, private institutions, and shadow networks, is the invisible hand that truly governs the global economy. Unlike the visible mechanisms of government or law, this influence is subtle, pervasive, and nearly impossible to track. It is exercised not through elections, public debates, or media announcements, but through carefully orchestrated financial maneuvers, policy shaping, and strategic interventions. This is the layer where the most powerful decisions are made, decisions that affect currencies, interest rates, trade policies, and ultimately, the wealth of entire populations. This invisible hand thrives on secrecy. The public sees only the outcomes: recessions, inflation, market booms, and collapses. Rarely do they understand the orchestration behind these events. Governments often act as intermediaries, executing policies that were designed, influenced, or recommended by the hidden network of elite financiers. Meanwhile, the media amplifies narratives that align with these interests, ensuring the public remains unaware of the true power dynamics at play. Moreover, technological advancements in finance, such as algorithmic trading, AI-driven market analysis, and digital currencies, have made this control even more precise. Decisions that once took weeks or months to influence markets can now be executed in milliseconds, magnifying the reach of those in the shadows. The result is a system where a handful of actors can influence the economic fate of nations while remaining invisible. Recognizing the existence of this shadow government of money is essential to understanding modern financial crises and global inequality. While it may seem abstract or conspiratorial, its effects are tangible: wealth concentration, policy manipulation, and cycles of boom and bust. The system may appear chaotic, but in reality, it is carefully designed to protect the power of the few and maintain the dependence of the many. An invisible empire built entirely on money, influence, and secrecy.